Are you going to start with that screen, Neha? The question right up front?
Uh, yes, we'll leave the hi, Aaron, can we leave the title slide on for maybe a minute and then we'll switch to the first question?
Yeah, because
Sure.
it's a bit kind of
Yeah.
abrupt.
Yeah.
Hmm.
Thanks, Aaron. Hi, welcome everyone. We are just giving everybody a few minutes to log in to the webinar before we get started. So thanks everyone who's logged in already, and just stay with us for a couple of minutes before we kick this webinar off. Thank you so much. I see we have attendees logging in to the webinar, which is great. Thank you so much, everyone, for taking the time. Why don't we switch to the first question, which actually allows all of our attendees, while we're waiting for everyone to log in, scan and give us their thoughts on our polling question we'd like to begin with. Everyone who's logged in, feel free to scan the QR code because we'd love to get your perspective before we actually dig into this conversation with your intention to kind of join us and take time out of your schedules. Do your AML and sanctions screening teams currently operate in separate siloed processes? Yes, no, not sure. Um, we are just trying to gauge what's happening right now within your organizations and also kind of gives us a color of the intention behind us all coming together and having this conversation. So we'll leave this with you for a minute, and exactly 2 minutes, we'll kick this off. Thank you. The last minute before we get into the webinar, we have a polling question for all of you. Please feel free to scan the QR and log in your answers, and we'll later get to our speakers giving their thoughts about what they think of the results as well. Great. Thanks, Arun, for managing that. Um, we could get started. We have attendees logged in, and good afternoon, everyone, and thank you for joining us for From Silos to Synergy AML plus Sanctions for Australia. I am Neha Kumar, your moderator for today, and also part of Factum, spearheading the efforts in Australia. Over the next hour, we'll explore why organizations should move beyond siloed anti money laundering and sanctions processes, and instead build connected compliance frameworks. Uh, Before we dive in, I'd love to remind all of you who've logged in that we have our Q&A that is open. Please use the Q&A panel in the Teams to submit questions, and we'll come back to them later as the discussion progresses. So let's get started. I would like to take a minute to just give everybody a quick introduction to Factim, which is doing this for the Australian region for the first time. So we're very excited to be interacting with all of you. Factim was founded in 2021. We're a young company with a clear goal: simplify financial crime compliance. Our team of over 100 people spans across London, Dubai, Dublin, Bangalore, and Pune in India. And we combine global regulatory expertise with advanced machine learning to support banks and financial institutions, fintechs, and all regulated entities. Essentially, we help compliance teams identify risks faster and operate more efficiently. The intention of us coming together was primarily to have a dialogue with industry experts who have graciously accepted our invitation to take an hour of their lives and schedules and join us today. And it is my huge honor to try and encapsulate our speakers' very vast experiences in a few lines. So, excuse me if I miss out on a lot of their accomplishments that they've had over the last few years. Um, but I would like to, give it a go and attempt to make introductions to people you already know from the industry for a while. We have Ob Chapman, who has graciously accepted our invitation to be with us today. Hi, Ob. Thank you so much for joining us today. Um, Ob is the authority on banking and financial crime compliance with senior leadership experience across all large financial institutions in Australia and has provided international AML CTF advice across organizations, across industries that are regulated. Ob also co-founded the ACAMS Australian chapter and has received the ACAMS AML Professional of the Year award as well. Now, to do justice to Ob's introduction, I would need to genuinely use up the entire time that we have allotted for this webinar today, but I am going to leave all of our information about our speakers on our website. And thank you, Ob, for joining us on the webinar session today. It's lovely to have you, and we're really looking forward to your comments.
Thank you very much, Neha, and I must say that was a glowing introduction. I'm not sure that I claim to be the authority. I've certainly been around it a long time, and hopefully I can contribute to this webinar.
Appreciate it, Up. Thank you so much. Our next speaker, everybody, is Manish Ghia. I have gotten to know Manish over the last few months, and I think in every interaction, I take back something more about financial crime compliance and space. With his experience across geographies, he is principal and founder of Compliance Advisors. He is a compliance and governance specialist who previously held senior roles across organizations, not just in India, but also in Australia, Colonial First State, Common Shore, AIA, and also Bitrade, which is now known as Kraken Australia. Manish served on the ACAMS Australia Asian chapter board as well and actively contributes to industry initiatives. Thank you, Manish, so much for taking the time and joining us today. We are really excited to have your 2 cents on the entire conversation, and hopefully our audiences will go back with some really interesting insights from all of our speakers.
Thank you so much, Neha. Thanks for that introduction. Really glad to be here, and looking forward to share a few insights with the audience.
Appreciate it. Thank you. And last but not the least, of course, our very own, Samvit Mohanty. He leads the sales and business development across Asia Pacific for Factum. As a colleague and as an industry expert, having interacted with Samvit over the years, I know his deep background in financial crime compliance also runs with a very true passion to help customers with the right solution, with the right combination of solutions as well. His deep background spans across having worked with Dow Jones, Equity, LexisNexis Risk Solutions, Moody's, and over his stint at Factum, he's been looking over the growth for Asia Pacific as a region. He specializes in emerging risks such as digital fraud, complex sanctions, trade-based money laundering, and also co-chairs the India board for the Association of Certified Financial Crime Specialists. Sambit, thank you so much for taking the time. I think it's going to be a very interesting color from all of your experiences that you bring to the panel. And we really appreciate you, agreeing to be with us on the session today, and looking forward to your thoughts as well.
Thanks, Neha, and very, very excited to be here and share the stage with Bob, Manish, and you. Happy to be here and learn and share. Thank you so much.
Wonderful. Thank you so much. And a little bit about me, your moderator for this webinar session. I obviously am honored to be having the opportunity to moderate such an esteemed panel. I have about close to 13 years of experience in the industry myself in India and South Asia. Worked with organizations like Dow Jones for a large chunk, and also now Factum, having understood how India, South Asia, and also now learning how Australia as a region is, embracing regulatory changes and how companies are preparing themselves. So I think it's been a very interesting journey, a very interesting learning curve for me. And well, I know I'm taking my notes as my speakers start to give their insights, and I hope you have your pen and pads too. Just kick this off, I think I would like to see if our attendees have had a chance to respond to the first poll question. Arun, could you help us with looking at the results on the back? If we have, or else we will come back to the question later once everyone's had a chance. Okay, great. 1 second. Okay, we do have a QR code here and we can come back to this, but I would still like to kick this off by, asking the importance of AML and sanction screening teams currently operating in siloed processes altogether. I think if our attendees could take a minute, scan their QRs, and help us with your thoughts on this. It can be yes, no, not sure. It's only going to help us kind of marry this discussion all together. While we do that, and I prepare for our panel questions, I would like to, it's not going to happen that I have you on the panel with us and I don't start the panel discussion by shooting a question right at you. So you're going to be, my first speaker that I'd like to hear from. I would, want you to help us understand Austrac's 2024 priorities, right? Emphasize board and executive accountability in AML CTF culture. What governance or cultural changes should banks implement to ensure compliance is genuinely owned at the highest level rather than treated just as a checkbox? And I think this will really help us set the tone for the conversation that I'm, hoping to have. And again, reminding right before I allow Ob to give his comments, everyone, please use the Q&A section for your questions, and we will keep moderating and make sure we ask those questions to our speakers. All yours, Ob.
Thanks very much indeed, Neha, and that's a very good question to open up the whole of this webinar. I think it's a very interesting question in that, what are we actually talking about? Your question related to what governance and cultural changes should banks implement. Now, when you think about the reporting population and those that are classified as banks, they come in all different sizes. At one end of the spectrum, we have global conglomerates. that are, we're talking about the very large ones that operate in multiple countries. We then have those that are, can I say, domestically grown, but do operate in more than one country. Then we have those that are entirely domestic, that they have no operations outside Australia. And in fact, some only operate in an individual state, depending on what their background was. Many of these small banks were in fact credit unions and building societies that have actually graduated into having a banking license. And therefore, they have a very close-knit organisation itself. It might only have 100 employees. It's a regional credit union that's now called a bank. And therefore, their governance and culture is going to be extremely difficult to bring into the same bucket as, say, when we're talking about Bank of America or someone like that that's in multiple countries. Very, very different. But I do think that if we accept that the culture is driven by the size, the complexity and the diversity, we've just got to take that as a fact. It's not a one-size-fits-all type of organisation, a structure that we've got. But there are some core principles that I think we need to think about. Governance is by the board and the senior management, unless, of course, there is no board, but the majority of our entities do have a board. They set the risk appetite for the company's business. What are they? Are they a conservative organisation? Are they an aggressive new startup? And they're going after markets everywhere, trying to make some inroads? Have they set risk tolerances? And by that I mean, do they have principles in place that say we will not have more than X percentage of our book loaned out to a particular category of clients? That will drive part of the culture. Are we all in marketing? Are we all in construction? Are we all in just what? And so that's going to have an appetite that will come at the top, which is going to drive the risk assessment. And we're going to come back to the risk assessment later on, because I think that's the board saying, this is how we want to do business. Now, AUSTRAC has set some very, very clear guidance. It's general, but it's clear of what they are expecting. This is no longer a set and forget. And we'll again go into that later on as well. They're expecting continuous oversight. And I think there's some principles that you'll learn as you go through society, as I have in the different institutions that I help, and that is you can outsource responsibility for certain tasks, but you cannot outsource accountability. And I think as we've seen what the regulators are now doing, some of the enforcement actions that have taken place in the last 10 years, more recently the last 5 years, where they've honed in closely, they're after the board, they're after the chief executive officer and so forth, because you really own the risk. And so I think the answer is that's what companies need to think about. Do we really have ownership at the top? If you've got 100 employees, you've got 50,000 employees, is there ownership at the top? And that's clear to setting the culture.
Now, thank you so much, Rob. I think that really helps us to kind of
Neha, if I may just add one point there, that
yes, I was just coming to you, Manish.
Absolutely rightly said, that the top people are the custodians for the ensuring AML compliance. I think it is as much as the operating framework is efficient enough as well, that all the information is going up, the risks are being flagged, the information being presented, because most of the cases had their governance failures, and it is at different levels. If the information hasn't gone up, it's a different kind of a governance failure, though of course always the ownership rests with the top people at the end of the day. And I'm just woken up to the news of Bendigo today, so you will see what AML failings they had, and it seems like AUSTRAC is talking to them and all that. But all the cases, I think if one thing was probably common, it was some the flavors could be different, but the governance failures, so yeah.
Can I just add a point there, because Manish has brought it out very well. There's some terminology that's used in a local way that sets the scene. And in large corporations, it's known as the permafrost zone. No one wants to pass bad news up because it could affect your KPIs, it could affect your bonus. And so bad news is sheltered from the executive. That's part of this cultural change that we're talking about. No one should be afraid to pass up the actual news, whether it's good, bad, or indifferent. But unfortunately, we do see some complexity that's brought in by different measures. And I do recall the HKMA making a very clear statement, and that is that the middle order is where we have the problem. It's not the executive, it's the middle order. And it's probably because their remuneration is driven by the results and not bad news. And that's a nexus we have to break.
True. No, thanks, Saab. And Samit, I would like to hear from you your thoughts before I move on to our next question for the panel. So, you've seen transitions working with clients across geographies now, and your thoughts about what companies should be looking at.
I agree with Ob and Manish, and I think it's very well how Ob put it that, and I've seen this way too many times across regions, across companies, that a lot of the times the bad news doesn't go up if there is a gap in the system. It is not highlighted until a very long time, and I think centralization of things is one of the benefits of centralizing things is actually that, because you're not really putting all your eggs in one basket. You're not missing out something that's going wrong because it's very siloed. So that's one of the things that comes across when you actually centralize things. And so I think that I completely agree with Ob and Manish on those points.
Wonderful. Thank you so much. And that was just one of the simpler, softer questions. I'm going to turn up the heat and actually get into understanding what needs to be done here. Now, we all know, I think we've all seen this over the last few months, ASO and the Department of Foreign Affairs and Trade have been ramping up sanctions focus. Example, ASO's new guidance notes on sectors like mining and on sanctions and proliferation financing, and DFAT steep penalties for breaches. Now, my question to all of you, and Manish, I'd like for you to go ahead and give your thoughts on this first. How should firms adjust their AML/sanctions policies, programs accordingly? For instance, what is it that what do these developments imply for risk assessment, customer screening, ongoing monitoring? And I think this will really help our audience, and your thoughts will really help our audience understand what needs to be aligned when they're looking at explicit sanctions compliance priorities. So, Manish, can we hear your thoughts on this, please?
Yeah. Look, I think most of the entities, they understand at some level what needs to be done for the AML and what needs to be done for the sanctions. And I would take that liberty to think that everybody is doing what needs to be done, right? I mean, it's more about how it is done. That's where all the problem comes in. So especially for the tranche one entity, there could be this, familiarity breeds contempt kind of a situation where probably sometimes there could be an underestimation of what is really, required for tranche one regime reforms, and wait till the end to really start implementing. But I think there is quite a bit of pieces that need to be rehammered and refashioned, I guess. And as you mentioned, sanctions, I think that is one of the interesting one. So far, sanction has sat kind of outside, even though internally some of the companies might have had common departments or somebody sitting at the top who has a common view and all that. But now we have the sanctions going right into the AML book. And then there is the new animal in the town, which is called proliferation financing. I think everybody will take some time to probably understand fully how the proliferation financing will work. It's a new thing. I mean, I myself am trying to understand it. But if you haven't got your sanctions right, I think that you may not be able to get your proliferation right, proliferation financing prevention controls. So that is one thing which I think. It is very important, I think, that the person, at least at the top, you may have definitely the operating team, but some person has a integrated view of what is the sanctions risks and how are we preventing that, what are we doing, and what are we doing on the AML side. And maybe, I don't know whether the sanction guy is doing the proliferation financing as well, or there is a third guy who's doing it. But that consolidation of the view is essential to have that efficiency, to have an integrated view of a customer. A customer must have clean KYC, but there is some problem with the sanction, or it is other way around, and you don't want to have that embarrassment that, oh, I didn't know this, and that's why I had a customer risk rated slightly differently or even lower compared to if I had an integrated view of that customer across all three spectrums. I think the risk assessment will be the big activity. My sense from the working in the industry, my sense from looking at it, what is happening around, we still have to get the risk assessment right. There are so many levers of risk assessment, and the fact that so there is something which is very clearly visible variables. You have product, you have jurisdictions, type of customers, what kind of channels I have, what kind of payment modes I have, what is the propensity of the products and things like that. But there are other equally, if not more significant elements, and that is our own decision and own judgment, because it's a risk-based approach. And that is where you have to take an action that, what risk do I kind of see in a particular product, in a particular this, and how do I treat it? Same two things in two different shops can be differently rated, and rightfully maybe. So I think that is something, looking at the whole landscape again, while keeping the context of what has happened in last 15 years, what has happened more importantly in last 3 to 5 years. What is the new regulatory expectation? Because now we are living in a different world. AML and risk assessment in 2006 is no more same, and again, reading Ostrac's decisions and judgments or cases with the entities, there are many entities that have never dusted their AML programs or their risk assessments after they're put in place, many years now.
Right.
Now, at least they will be forced to look at it at least once in 3 years, if not earlier, which a lot of companies should be doing, according to me. So yeah, I think there are many elements. The understanding what is changing is very important. Looking at it from a fresh eyes is very important, I think, because don't carry the baggage. Looking at it, I think there is an element of having that ownership, that it's not just in the company that I am doing a compliance program, but that this is a national priority. Because
Absolutely.
you're working in an ecosystem and trying to make it less risky.
Yes.
If you need to have that perspective as well. You don't bring additional risk to that ecosystem, but do your bit to that. But yes, there are many elements. I mean, I would not list them all, but there are different ways of doing CDD. If you are doing a DBG, you need to refashion your reporting group probably, or you don't want to do it for digital currency exchanges, a much wider world. And they have got a whole lot of past with them. So
I
look
think
at
some
their past
really
as well. So yeah.
interesting, yes. Thank you, Manish. I think some really interesting points that you raised. And Ob, I'd like to hear from you. How should
Thanks.
firms adjust their AML sanctions programs with everything that's going on with ASO and DFAT? Your thoughts, please.
Thank you very much. And Manish raised some very excellent points there. But I wonder if we can go back to a fundamental. And the question here that we're trying to address is, are we going to stay in silos, or are we looking for some synergy, some centralization between them? And it is a rather interesting question. If you look at AML and you look at CDD and you've got a good risk assessment, and these are base assumptions, then you'll know what sort of clients you've got, and what you know about them will tell you where they operate. Now, from an AML perspective, you're interested in their transactions and you're interested in their activity. From a sanctions perspective, you're not only interested in them, you're interested in their counterparties and who they're dealing with. And if you've got silos, I have to ask, and I ask it all the time of my clients, what set of sanctions tables or lists have you selected to use in your organization? There are well over 150 different lists of sanctions around the world. In fact, it's probably more than 200. So no company, no bank is going to use all of them. It would just be noise. So where did you get the information to decide that these were the 27 lists that you're going to put into your sanctions monitoring? And what was driving that? It should have been driven out of the CDD that you did for AML when you onboarded the customer, and when you've done, as Austrac's pointing out, the events-driven changes as to why you're changing the risk of that particular client. So it's this ongoing monitoring, which should then reflect back into the sanctions. Oh, we've now got clients that are doing business with counterparties in this particular jurisdiction. We do not even have that list on our base set for monitoring. And I think these are fundamental issues that really drive you to say, we need synergy. We need this being done in a way that the sanctions team, if they're separate, and this AML team actually are using the same data for a start. And at the moment, I suspect that many aren't.
Absolutely.
Yeah. Yeah.
And
I'll just
I
add
think
a
that's
point
a very
there.
great, sorry, Manish. I thought that was
Yeah.
a very interesting segue into data. And I want to hear what you have to say, Manish, but I think that data was such an interesting segue for me to lean on Sambit, because I know that, having worked for a data provider myself initially, and, Sambit, you have experience across different companies who provide all of these solutions. And from
Right.
someone who's looked at it from both ends, understanding clients' requirements and what these data providers do, of course, a lot more than 200 sanctions lists from around the world and other official lists that companies need to look at. Your thoughts on what is it that companies need to prioritize? And also, if you've seen any main barriers when it comes to adopting such unified platforms that are required for a more efficient AML and sanctions process.
Sure. So, I mean, great points by Manish and Auburn. And just to corroborate that with all my experience in this space, I think if I look at, let's say, 10 years ago or 15 years ago, it used to be sanction screening was a very siloed out process, and it was very simple. You take a name, you do a name match with maybe 2-3 lists, OFAC, or if you're operating in a certain region with that list. But across the last decade, it's really moved into something a lot more. It needs to move into something a lot more centralized, because the geopolitical situations have changed. The kind of products that are out in the market have changed. What institutions are offering and where the risks could lie has changed completely. Even from the regulator or a law enforcement point of view, the way investigations happen and the kind of information that is asked from a reporting entity has changed a lot over time. So today, it's not enough for you to just do a siloed sanction screening. You need to actually have a very centralized process where client behavior in the broadest term is being shown in a central place. Like Manish was saying, an integrated view is what is very important. Today, you might be dealing in one department where in your retail banking, where you're onboarding a customer, but what if that customer in your trade finance has worked with you earlier and has had some kind of an issue there? If you do not have a centralized process, that flagging of that customer is not going to happen when you're onboarding that customer at your retail banking.
Right.
So whether it's retail, whether it's trade, whether it's cross-border payments, it all adds up to a customer view, a customer behavior, which is very important. I mean, today there are institutions who are also getting in social media behavior into things as well. It's gone to that level. And like I said, from a regulatory or a law enforcement point of view, the ask from a reporting entity for an investigation, the kind of data they ask for is not limited to, did you do a sanction screen name check? They ask for a lot more data, because eventually what they are trying to do as a law enforcement agency or a regulator, or what you are trying to do as an institution, is make a story and connect the dots. And to connect the dots, you need to have everything in the same place. Now, where does the hurdle come in? What are the obstacles I've seen with institutions trying to adopt centralized things? Is because it works both ways. To have a centralized view of things or centralized data, you also need to have good quality data. So it's a whole cycle which starts with how are you collecting data across your different departments. So you need to establish a very solid governance around it across your institution, where it is wherever you're collecting the data, whichever department, whether it's retail, trade, anywhere, it is captured in a certain way. It follows some rules of governance. Only if there is standardization across collection of data is when you will be able to do analytics and storing of that data. So it needs to start from there. Also, another obstacle I've seen is that for the modern systems to work, it uses a lot of AI for doing entity resolution, for doing entity matching, for creating that story. And that's where a lot of legacy systems that are currently in institutions, you need to really upgrade that or replace those, which kind of turns out to be a big task. The last but a very important thing which I've also seen is the gap in the skill set. Many institutions today, especially the teams which are doing these kind of checks and analysts and investigations within a bank or within an institution, are of, let's say, a mid-level management kind of experience, who have dealt with a lot of legacy systems. So you need to up the skills of your team as well for them to be able to use modern systems, for them to be able to create analytics out of it, create stories out of it, in a way that they can use these AI-driven systems today.
Right.
And that's one of the hurdles I've seen. Adoption of these technologies also comes in with, do we have the right skill set to be able to make the most of this? So those are the kind of things I've seen across regions, I would say.
That's very helpful, Sambit. I think that's interesting to know. Manish, I'd like to come back to you. I know you had some thoughts to add to our discussion.
Yeah, I was just thinking, as Bob and Samvit were saying, that I think, within all these things, it is really calibration. Apart from getting everything right, calibrating all, whether it's your process, your system, or your tools, whatever is very, very important. Samvit mentioned about data, and that is always one of the elephant in the room. I believe, the source of data, the kind of data you are getting, the frequency or the periodicity or the time within which you should be getting that data, and then the data coming from the external vendors as well, for screening, for example, if you have taken, so you have customer data, internal data, and all that. All they have to be really good for you to get the best of the results. And that is not always the easiest thing, especially when you have legacy systems, legacy pipelines, and all that kind of thing. And calibrating that, if I take just one part of transaction monitoring, calibrating the transaction monitoring is very essential, again, to really have a good oversight, because, and it is, again, not a set and forget regime. You should have your governance and your decision making should kind of throw it up, when a change is needed. If there is a significant change in the operating DNA of the company, or at the end of 1 year or 2 years, there has to be a refresh of all these elements. Having said that, one thing I always say that, AML and sanctions and all that are such enterprise-wide compliance frameworks, it is not always easy. I mean, and as a practitioner, I'm wearing that hat, I can always have sympathy with, in a manner of speaking, that, quite a bit of efforts required, quite a bit of resource commitment required, kind of bit of, on top of everything else that is going on. So yeah, I'll just stop there.
No, thanks, Manish. And that's obviously very important. Moving on, right? What I would request each of you is to call out specific examples of common breakdowns, whether you've seen duplicated processes, missed connections between alerts that have, where you've seen these functions siloed and they've actually been the reasons of breakdowns. This, to be honest, my intention is to call out to our central theme, right? The stress that fragmentation leads to compliance gaps. By discussing real-world failures such as suspicious transaction not being flagged because it fell outside one system scope, because it was working in silos. The intention is to actually illustrate why each of you, I think treating AML and sanctions in silos heightens the risk, and reinforcing the need of synergy is extremely important for organizations. Top down, bottom up. I think it needs to be a more cohesive approach for organizations. But why does managing AML and sanctions separately create vulnerabilities? Ob, your thoughts?
Yeah, thank you very much. Look, it's more complex than we would like it to be. If I take a large financial institution, the relationship that the institutional product stream have with the client versus the retail versus the corporate versus the small business, they're going to have very different relationships with the customers. Centralizing is good, but we need to be careful that we don't homogenize all of the alerts, because the relationship is very, very different in those segments of the business. How you monitor for sanctions is probably more homogenous, because you need to know, no matter which stream that client's in, do they or anyone they're interacting with, do they appear on any of the lists? Do I have a sanctions risk? Whereas AML is a little different. I will treat the corporate client very, very differently to the retail pay-as-you-earn worker who's only running 2 transaction accounts and a credit card. I think it's really very interesting. I'm a fan of centralization. I'm a fan of this synergy that we achieve, but do bear in mind, you will treat them differently depending on which stream they're in. You may not treat sanctions very differently, but you'll certainly treat terrorist financing, and more importantly, money laundering, you'll treat that very, very differently, because you have to. And if I can just give a silly example from my days in the bank many, many years ago, not understanding the customer and having a common view led to a stupid example such as I'll give now, and that is, we wrote to a customer telling them that we were very pleased and we'd like to offer them they paid off their home loan and we'd like to offer them an investment property loan now. At the same time, we were sending out letters to the customer threatening to foreclose on them because they were not paying their credit cards off and not doing it. I mean, hang on, where's the one view of the customer? That not only is a bad customer experience, it's poor management. And I think that's where these gaps that we keep talking about keep coming up. You cannot manage this in silos.
Right. No, thank you, Ob. I think that's very specific, and it is true. It needs to be embraced by organizations. Manish, your thoughts on how these common breakdowns and having worked in silos kind of create vulnerabilities for organizations. And you've seen it. And to be honest, I would lean into you to throw some color, because you've seen it in different geographies, very differently evolved. You've been the backbone at the forefront of what India was doing years ago when we were just starting off in our journey against financial crime and setting up AML systems like yourself. You've done it for organizations. The transition that you've seen, or the behavior or the vulnerabilities, and that even now the Australian entities are, facing all these reforms. They need to be relooking at so many things. So I'd love to lean on you for that color of different geographies.
Look, I think the challenges of sanctions is probably similar, maybe a bit here and there, but similar across the world, if I may put it that way, in all the geographies which have a good sanctions compliance requirement. I think, again, as I mentioned, we have evolved over last decade plus, or maybe 15 years plus. Sanctions was a very small component, at least for most of the organizations. I will not talk of the big banks because they do things differently. But for most of the other organizations, it was just about screening, and probably you're done with it. And I think maybe even that came a bit later, at least, coming from India experience as well. So there has been a journey towards sanction as well, but it has been a less, I would say, aware journey. I would say, sanctions has always been treated as like if not a stepchild, a smaller brother, of the whole AML thing, until now, when it has become, I guess the turning point has been the Ukraine-Russia situation, which really threw the whole sanctions thing on our face. I remember, working with one of the institutions, there's so much of sanctions reviews that we did, and particularly within a certain set of vendors or third-party supplier of services, and came with some very interesting findings, because they had, if I have a vendor, I'm a, principal sitting in Australia, hired a vendor or a service provider who is principally US based. we could have a situation where, our sanctions compliances could conflict. What needs to be done by him to defray his OFAC obligations versus what I need to do or not do. Maybe I have a leeway not to do something, but he has an obligation to do something, and we are not, really at this thing. So I guess those kind of challenges, AML still has probably less of those challenges, but sanctions can present, especially if you have a little global outlook, those kind of challenges as
Sure.
well.
Mhm.
So I think that having that integrated view we talked about has now become absolutely critical. And I
Right.
think, again, as I said, at least in the organizations that I've worked for or I've discussed with, there is somebody at least sitting functionally who has views of both the subjects. And if you don't have, then definitely that could be a potential recipe for disaster, because you cannot have different thoughts for something which is an adjacent or even consolidating subject, if I would say so. So I think that's where I would say, very essential to have that in the mix, have see it within the same risk lens to
Right.
calibrate again, if I may put that, what risk my sanctions present. I mean, I may have a very high AML, money laundering risk, but I may have very less sanctions risk. Other way around, or everything is really, in the world of digital currency exchanges, for example, where the wallets are, we don't know. Maybe some of them are in DPRK, some of them are in some regions, So how are we really
Right.
understanding that and mitigating that? And come tranche two, all those questions will really come to the fore,
Right. I
So
think we
I
do.
think very important
Yeah.
to calibrate, your thinking, integrate that, and have that governance which kind of goes along with that. Just last point on that, and it's not just here and now, but as we're constantly evolving, one of the thing is that, new financial products, new age fintechs and all that, are they really able to get it right as well? Because in the
Right.
speed of doing business, are we really, kind of not having the compliance come along with us? We all want instant KYCs, instant CDDs, instant screening. All these are now kind of taken
Yes.
for granted, but there is still, calibration has to be right, analysis has to be right, mitigation, risk mitigation has to be right. So yeah.
No, thanks, Manish. Thanks so much. And Sambit, while I lean on you for your thoughts, I think what we're hearing is cohesiveness. Having a one view of all of the risks is going to obviously help address those vulnerabilities. Sorry, just give me one. Coming back to that point, I think it is important to give compliance the importance it needs. But I think what businesses often struggle with, and to Manish's point, customer experience versus compliance requirements. How long is that process taking? How much due diligence time do I have? What's my turnaround on that particular workflow? And interestingly, to a polling question that we just did, is your internal blacklist screening process, including approval workflows and deduplication automations, adds to this entire workflow problem that we're just leaning on. And the audience has a split view. 40% say yes, they do. 40% says no, they don't. And 20% are not so sure. So I think there's no right or wrong way to go, but I think I'd love to know your thoughts and perspectives on that.
No, absolutely. I think as Manish was saying, instant KYC, instant everything. I mean, we're living in a world of instant gratification, instant KYC, everything, right? And it's very important to have a centralized view. The thing is, you need to balance that out with customer experience. I mean, we need to do our due diligence. We can't miss out on that. But at the same time, customers today have a lot many options to go to for the same thing that they want to do. It's not how we were operating maybe a decade or two ago. Uh, which brings us to the point that your systems and your people need to be equipped enough and modern enough for that to happen. You cannot have a human sitting and trying to make too many connections from too many data sources and then provide service at the speed of light. But you can have systems that do that. In fact, in today's world, there are a lot of organizations which, for example, I've spoken to, who are not aware of certain platforms which are there, which can help them manage all of this. They still, even if they are trying to centralize things, some of them are not aware that there are platforms which could help you centralize a lot of these things. So that's important, even from an internal blacklist. And internal blacklist, I think, is a good point, is a very important point. in very large organizations and banks, which have very modern systems, even they rely for their internal blacklist or internal negative list management. They do it very manually. And we've seen that happen across very large institutions as well. They're very fragmented and they're very manual. Now that leads to a lot of delay, that leads to a lot of duplication. When you're trying to collaborate that with almost real-time updation of your regulatory watch lists, do your internal watch lists, the deduplication, does it happen at the same time? So that's something that we've seen as a pain point, and there are platforms and solutions that do that. So I think that's an important point. Again, from a when you started, you were asking about some real examples of how these things can fall out. And very recently, in July, I remember we were working with a very large bank, and if you remember, in July, OFAC had sanctioned quite a few companies related to the Shamakhani network of Iran. And what we realized is that this bank, which operates in the Gulf, as Middle East, APAC, everywhere, they had their own teams in the Middle East who were doing sanction screening for certain lists, and they got a name, but it didn't trickle down to their Indian entity, because there was one person who was on one of the UAE companies which was sanctioned because it was helping the Shamakhani network. And that very person trickled down to be a director of a jewelry business in India. And the same bank was doing tremendous amount of business with that jewelry entity, where he was a director. It was actually one of their prime priority customers, whereas their own bank was flagging off this person as a sanctioned person in their own Middle East office. And for 3 months, they didn't know about this because the information flow wasn't happening that way. So I think it's not just about having all sorts of data to connect people and entities and sanctions, but you need to have those internal processes where the data flows in a way that when somebody or a company or a person is flagged out, the person is flagged out across. I mean, if I completely digress for a second and look at the basic thing of what we use, like let's say a phone, when you change your phone, you need to click a button and everything is updated, right? So if you're updating something today on your Android, it gets updated everywhere where you log into your Gmail. I know companies which have a centralized workforce management system, a travel management system, but they're still struggling to do an integrated AML and sanctions management system. But it's very important to do that. So,
thanks so much, Samir. That's very helpful and very to the point, because I think we're in this part of this, and I was coming to you, Ob. I think we're in this discussion where we are moving. I think we are moving from theory to tools. So I'd love to hear what you had to add to that, Bob.
Yeah, look, I'd just like to take a slightly different perspective on exactly the same problem. If you read all of the material that Austrac has put out in the reforms project, if you look at what the Sanctions Office are putting out, increasingly the guidance they're putting out, regulators are expecting continuous real-time monitoring, event-driven changes as to how you deal with your customers. If you're dealing in silos, and Sam's example was a brilliant one, where you're dealing with a customer totally different, and I gave that other example before, the answer is silos don't allow you to do this. You're going to be in trouble with the regulators for saying, why is it that you know about that customer in this particular system and you know something totally different about the customer in another? I suspect that I'm going to be very rude to my old employer. I suspect that there's at least one product system in my old bank that's still got me down as a student, because that's when I first opened the account that I've still got, one of the many accounts I've got. And the question is all of the data about the customer always up to date? Silos do not work. The regulators are getting stronger and stronger on, you should know your customer, you should know your customer, you should know your customer, not you should have 3 views of the customer.
No, thanks for that. I think that's an interesting point, and I think that's helping me move into a more practical question for the three of you. Let's move from theory to tools, right? I think we've all spoken about it's important to have a cohesive view. It's important to have synergy. I think we've established through this discussion so far today that silos would not help organizations in the best way. And towards the end of this discussion today, I'd like our audiences to leave with some practical tools and tips as to how do you think entities can embrace technology, especially in the world of AI. There is so much going on. How does one embrace and leverage technology and all of the options around them? I think while we've seen regulators amp up their game, I think the industry has amped up their game in terms of offering so many solutions.
Right.
There are so many tools out there. So, considering the upcoming AML CTF reforms for the industries in tranche one, I would like each one of you to maybe help iterate concrete steps that institutions should take now on not just building their systems, but also whether it's governance, whether it's resourcing, whether it's upgrades. And I know we're leaning towards the end, so I'd like specific points from each of you. We'll start with you, Manish.
Yeah, thanks, Neha. Absolutely. I think that's a very critical area. The most famous tool for doing sanction screening, I think, for a lot of companies is Excel, and that is something which definitely needs to be given a look at. That is that still something fit for purpose in today's time, age, and most importantly, in the context in which a particular company is. Now, obviously, not every company can buy fancy tools, and AI is probably even for the towards the top end of the town before it trickles down to others. But having technology helps you to deliver precise results. It's as simple as that. Automation helps you to do that. And in certain cases, it is even the regulatory expectation. I don't think company X can get away with, that I don't have the right tools, or the tools don't work, or they work in a manner which is not
Right.
really the way regulator expects. Maybe company Y can get away with because it's a startup or it's a small entity, or overall risk posed to the ecosystem is negligible, but that is not the same for another company. So I think it is very important for the organization to really have that soul searching done for itself, and do that upgrades if required by whatever is necessary, because that will help to reduce the risk. It will help in seeing the facts more clearly,
Yes.
because tools bring with them the if I may say, the power of analysis, the power of being able to scale up. A lot of it becomes on demand, if I may put it that way. So they help. If you have to screen a customer on onboarding, and if you refer to it physically to the consolidated list, that is a different way of doing things. It's not that it's a wrong way, but it's a different way. It's a different speed versus if you have a tool and in the context of your. So I think that is very critical. I would just leave it at
Thank
that.
you.
So yeah.
Thank you so much. Ob, I think question leading up to you when we talk about embracing technology and concrete steps to take, efficacy and efficiency. How are organizations going to try and achieve this with concrete steps that they can take? Your thoughts?
Yep. I think when we bear in mind what the regulators' expectations are, and they're getting more onerous, there's no doubt about that. Technology is wonderful, but I think people need to understand what is it that the technology is doing for them. And I'll give you an example. If I have something in-house and I download the consolidated list for sanctions, how often am I doing that? Because a person may not be on a sanctions list today, but they'll be on it tomorrow. So how am I using the technology that's going to give me that efficiency, that efficacy, that I know that I'm compliant? And I think that, AML, what am I looking at in transaction monitoring that would suggest that I actually need to do some more CDD or KYC? Because I'm seeing the payments coming in, or I'm seeing the transactions from different suppliers or customers, and it's not driving me to go back and say, I really don't understand what this customer is now doing. So if I bring that and the sanctions, the demand that your sanctions list has to be as at today. Now, if you have a look at the download version from the government, from the Department of Foreign Affairs, it's not always up to date. And how often am I downloading it? And if I only download it once a month, I could be in breach for 29 days of the month until I catch up again. That is totally unacceptable. So again, I say, ask what the technology is actually doing.
Sure. No, that's interesting. Ongoing screening, deciding what your frequencies are. Sambit, on this point, your thoughts about embracing technology in the right way to support systems and concrete steps, of course.
Sure. No, absolutely. I think extremely important first step always is to define what's right for you. Any organization, the same a technology could be perfectly suited for a particular institution, but might not be for you. So I would say as an institution, don't go out looking for the most sophisticated. Go out looking for the one that's right for you. And to figure that out, you will need to be very sure of what is your risk appetite, what are the kind of products that you're offering, what are the markets you're operating in, et cetera, et cetera. So define that first, go after the technology that's right for you. Again, you also have to be very realistic. An institution, whichever it is in the world, cannot suddenly give away all their legacy systems and move to a new one. It doesn't happen realistically. And at the same time, you have different sources of data, or let's say even your watch list, for example. Each watch list vendor has a particular area of specialization. I know institutions that use more than one watch list vendors, and you can't give that away. So what would you want should happen? You don't want to give it away. You can't go away with your legacy systems, but there are solutions and platforms that can help you utilize and make the most of these specialized vendors, right? So you also, what I'm trying to say is you need to be very realistic in your approach as well. You can't go to your management on your board and say, hey, you know what? We're giving away everything we were using today. We're going to get something new tomorrow. That's not going to happen. But there is an ideal midway. You have to go step by step. You can have platforms and systems that can help you integrate the specialized sources of data into one platform so that you can use the best of what you need. But again, I would reiterate, please start from defining what is right for you, because there are various technologies in the market that can really overwhelm you. Don't go in for the most sophisticated, go in for what's right for you.
So this is about tranche one this evening. Everyone should have some sanctions monitoring system in place. Everyone should have some AML transaction monitoring system in place. We're not saying go out and buy something new, but I do think Sambit's point was right. Is what we've got actually doing the job, given the increased expectations from the regulator? Yep. And I suspect in many cases the answer will be they are deficient.
Great. Thank you so much. I think I know we shot out 2 minutes on this discussion, but I would be remiss if I did not thank all of our attendees to stay with us through this discussion. Feel free to use the react button and let us know if you've had a really good time and taken some valuable points from this discussion from all of our speakers. Manish, Sambit, I truly appreciate your thoughts. And I know we're going to keep this discussion going because we have one coming up for Web Tranche 2 entities specifically on Thursday this week at the same time. As your moderator this evening, it has been my honor to drive this discussion with the three of you. Thank you so much. And to our audience, we value your feedback. It helps us tailor our content, choose topics that matter to you. So we urge you to please scan the QR code on the screen, use the link in the chat if you'd like to share your thoughts and follow-up materials. If you'd like to know more about Factum, of course, you have all of our channels mentioned on the slide. Of course, Sambit here leads the APAC region for Factum, and we would love to hear from you. Once again, thank you so much. And everyone have a great evening, stay safe, and I will see you very soon on our second chapter of this webinar series that we have. Manish, Sambit, thank you so much for joining us today. And to all of our attendees, have a pleasant evening and see you soon. Take care.
Thank you.
Thanks so much.
Thanks, everyone. Thank you. Yeah.
Bye-bye.